Hello everyone, this is Bobby Lee Bitcoin here again for the Bobby Lee Bitcoin podcast. I'm very excited to have Emmanuel Daniel as our guest today, otherwise known as ED. He's the founder of the Asian Banker and also now a global organization called the TAB Global, Asian Banker Global. And essentially it's a banking and finance research firm.
That's right.
Okay, so ED, very pleased to have you. Welcome to the Bobby Lee Bitcoin podcast.
I never thought I'd make it to the Bobby Lee Bitcoin podcast, especially given, who else is endorsed your book. You're a big man.
This is a small thing. This is a small thing.
And my entire education in Bitcoin started with you, Bobby.
Oh, thank you.
You may not realize this, but
how many years ago? Remind the audience.
I know that I was trying to stock up on Bitcoin when it was $900, buying it off you.
Wow,
right?
$900. Those are good old days.
Good old days, And I used to put money in your Hong Kong bank account because I didn't know how to figure out how to get a Bitcoin,
That's right.
And Singapore had all the banks banned, having any access and all that.
Yeah.
So those were the early years.
Yes, early years. So you're now an official Bitcoin investor.
Absolutely.
Yeah. Excellent.
And I also used to use you very much to understand the trends. Like, what about this new asset class I needed to know?
Yes.
And I took my cue from you, and from others, but primarily yourself and people like you who believed in Bitcoin and then saw the functionality in all the other cryptocurrencies and just kept coming back to Bitcoin as being the core of crypto assets. The others will come and go, but Bitcoin, there's something about it that will retain its intrinsic value. The more network it is, the more secure it is, and all that stuff. I learned from you.
Yes. Thank you. It's been many years. It's a great friendship. And what's most impressive about ED is you're very well trained in the traditional banking and finance world. So what do you think? What unique perspective do you bring to the table in terms of your knowledge of Bitcoin and cryptocurrency? How does your strong knowledge and early involvement in Bitcoin and cryptocurrency help your career, the research firm, the Asian Banker, in the sort of traditional banking and finance?
So I'm in the business of tracking the future of finance.
Okay,
and it's very important when you're a futurist, which is what I think I am now. Given the discipline that I put into the process. And the first thing about the discipline is you cannot be caught up with, or you cannot have a religion. You cannot be a believer in something that exists today. Because that you need to have the freedom to assess all new technologies or all new developments in their own merit.
Okay.
New
trends, new inventions.
That's right. And I started the Asian Banker in 1996.
Okay.
So that's 28 years. Now, yes. 10 years into the process, you actually think like a banker. You think about everything that's legacy and everything that needed to be protected, the incumbency of financial services as people know them to be. Your friends are people who created a 30-year career in banking.
Yes.
And so they are afraid of that career, going up in flame or just vaporizing because some new technology comes on and rewrites their history.
And do you actually see that? Like, do the bankers you meet, are they really
That's the first thing that they're afraid
because
of.
I know you understand both technologies, right? Both the old and the new. But do they really understand the threat of Bitcoin?
So my friends, my universe is made up of people like you, but also it's made up of traditional bankers who who would not let their daughters marry someone wrong because they have their reputation to withhold, to hold up to. So, that kind of thing. So, if it is their daughters, then it's also their careers, which is, traditional banking will not be disintermediated. What the regulators doing are correct. That they're trying to take on all the innovations that are taking place in decentralized finance and absorb it into traditional finance if they can. So I see all of that. And even to that, I need to be neutral. I have to stand one step behind.
Sure.
So when crypto is going $65,000, it doesn't mean that a whole new world is born. You got to go and look back into the fundamentals to understand what's exactly happening.
Yeah.
So that's why I took 15 years to write my first book.
Yes.
Because the first part of my journey was to, here we go.
Yes, the great transition.
And it's the great transition, the personalization of finance is here. It took 15 years from about the time I started saying I wanted to write a book about the future of finance.
Yeah.
And the first 10 years was in detoxifying myself and looking at all that was happening in traditional banking and not taking it at face value. That is, what is it? What is the transition that is underway? How do I describe it? And that was in the days when banking was about core banking systems that sat on mainframes, right? Where you hire an army of coders to go out and change. When your competitor introduces a new product, it takes you 6 years to come up with an application that can compete with them. Okay, and I know banks that were doing that.
Yeah.
So from that realm, and then things move fast. And then I needed to characterize the transformation that was underway. So one of the things I say in my book is there is a fundamental difference between the industrialization of finance and the digitization of finance. The industrialization of finance is doing the same things on and on and on, and doing it better, faster, smoother, and all that. But we're doing the same things.
Okay.
The digitization of finance is creating a whole new ecosystem where even you as a banker would not know where you stand. Okay. So, and then comes what are the disciplines that crypto is throwing at us now? So at first, and someone says this about the 4 stages of grieving, which is the first is denial, and then you go through anger, and then you go through some kind of a process, and then finally there's acceptance.
Yes.
So the banking industry is going through those 4 stages
in relation to
the transformation that is underway, the great transition.
Okay,
that the world that they created and they built their career on and their reputation and their status in society is melting away. Melting away. Okay.
What's the new thing that's emerging from it?
So now, first you need to get into that mindset of understanding what's melting away.
Yeah, and that's why you have this ice cube here.
That's right.
On the cover, it's melting away the traditional finance.
Yes, and so the new thing that is coming on stream now, and I'm still struggling with some of these issues. One of that is the end of intermediation. Okay, which is you and I, because of crypto, we can relate with each other directly. We don't need an intermediator.
Sure.
And also the whole intermediation business industry function is melting away, right?
Okay.
So the peer-to-peer thing is coming on stream. However, the regulators are slowing things down because they're
scared of it.
They're scared of it. At the same time, they do need to curate the process, if you were to call it that. They're not curating it, they're actually trying to tame it and bring it back to the industry that they're familiar with.
Yes.
But what they really need to do is to allow it to evolve on its own merits. So I struggle with a number of things. So the whole intermediation business, human civilization has never known this ever, that business or transactions can be conducted between 2 people without a need of an intermediator.
That's true. So just to explain to the audience, the classic banker role is where either 2 consumers or businesses or business to consumer business, where the bank serves as an intermediary for the trust and the payment and the flow of money, either loans or whatnot.
Yes.
Right, and that's the core model.
Yes.
And
so
that's going away.
Then
it's melting.
When I was and then somewhere maybe 2 years I struggled with this thing about intermediation. It's not going away entirely, because when you think about what's actually happening in crypto and outside of Bitcoin, if you take Ethereum or if you take any of the others, Tezos, they all need to be sponsored. They need to be. The moment you see a venture capitalist in there, that's an intermediary, right?
That's true.
So it's not like crypto has proven the alternative, in that way. It's also in a transition, in that sense. So that's what I mean by being intellectually honest. That yes, you know what's going away, but at the same time, you don't take everything that's coming at face value.
Sure.
And then it's a game of forces between different players. The regulators, the venture capitalists, the funders, and then the end user and all of that, the application developers. They're all sort of shaping a brave new world. And that is why I put my finger on the one thing that's going to characterize the brave new world. The personalization of finance is here.
Got it.
Right?
Okay.
And that's why there is a ice cube on my book cover, because I start the book by describing what personalization means. And I say that, hey, there was a time when ice used to be something you saw out of the lakes.
That's
Put
true.
it
That's
on
true. Frozen
horse-drawn
ice.
carriages, and then you take it to the city, and imagine the amount of wastage required. I mean that it goes through to get that ice cube in your glass in New York or in Shanghai.
Yeah.
So and then what happened? We created a refrigerator, right? And what is the refrigerator? It's the technology called CFC, chlorofluorocarbon.
Yes.
And what does that do? It absorbs heat and it enables water to become ice, right?
Yes.
And then how do you have ice today? It's when you want it, where you want it. It's fully under your control.
That's true. That's
right?
true. Very personalized.
So finance is the same in that today, when you think about the money in your pocket, it's probably sold around the world twice. It's subject to inflation, exchange rate, bank charges, all of that, interest rates, before it gets to you. See how not in control you are of money today, right? So through the breaking down of the intermediation function, money becomes increasingly within your own control.
Yeah.
And the promise of crypto is not that Bitcoin can go up to 65,000 or maybe 100,000. The promise of crypto is that each of us can issue our own crypto. It's a question of whether the other person will accept your crypto,
Sure.
whether you've got a reason to transact, and so on. So that's the logic behind it, right?
So essentially, the technology is now available for decentralized blockchains, where countries, nation states, even companies can issue their own coins, and they do that.
And
they can issue
individuals.
stable coins, individuals issue project coins, and all that.
And
so it
individuals.
democratizes the issuance of money, so to speak.
The state hates it, right? And then at the macro level, this is what I have been experiencing and talking to regulators.
Yeah.
I try to visit as many countries as possible. I go and see the central bank governor and ask him how is his CBDC going and stuff like that. And then I follow what the Bank for International Settlements is doing.
Yeah.
You know what they're doing? They are looking at the advances taking place in crypto and trying to keep up as much as they can. Okay, so the original idea that a CBDC can be an alternative to a cryptocurrency because it's issued by a central bank has so many flaws in it. Just the idea itself.
Yeah.
And not only does it have flaws, but crypto itself has been evolving. The other thing about crypto is that it's a technology that goes into it. The interoperability, the 24/7 transactions, the liquidity pools that are created, just by the community itself, not by any liquidity provider. You look at and then applications that can be developed on top of a crypto, and the fact that the applications are developed out on open source platforms. These are things that governments cannot fight with.
Yeah.
Eventually.
It's for the first time that we, the people, can have access to the technology.
So if you follow what the BIS puts out in terms of white paper,
and tell people what BIS stands for.
Bank for International Settlements, that is the grandfather of all the central banks in the world, or the club where all the central bankers in the world. I think actually
It's a central bank for central banks.
bankers, right? And I call it a club because if you look at the decisions that they come to or the agreements that they have, they are non-partisan. In other words, the U.S. central banker talks to the Chinese central banker and agree on so many things. They forget, that they are philosophically on different camps. But it's a club. It's
The club.
You know,
Is it full of white men? Old white men?
No, well, now it's becoming a lot more global.
Yeah,
but
that's good.
it's the way in which they tease out ideas and clamor onto ideas themselves. So, like for example, Y2K. All the central bankers thought that Y2K was going to, was the end of the world, and they worked on it, right? And then it turned out to be nothing.
Yeah, and this is the year 2000 rollover that happened 24 years ago.
Wow, it's 24 years ago. I still remember the day before Y2K.
There are people on this podcast audience who are not even 24 years old.
Oh gosh! And I remember the day before the year 2000. Everyone was holding their breath to see if the computers are going to go berserk, but no, it didn't.
Yes.
They didn't. And then came not and then, but about the same time, they fell in love with the idea of inflation targeting, right?
Okay.
Inflation targeting is where a central banker gives himself his own job description by saying that
to target,
and saying that my job is to keep inflation between 2% above or 2% below the current inflation rate.
Yeah.
And the first central banker who gave himself that job was the one in New Zealand. And then when they meet at the BIS, it's that's a great idea. So today every central banker talks about inflation targeting, right?
I see.
So in that same way, they just they have a love fest, and they just fall in love with the same ideas themselves.
What do they think of Bitcoin and crypto?
So
these BIS.
So the original idea that BIS had about big crypto was that it was evil. That this is the Antichrist. That we should try and kill it as much as possible. And then when the idea of central bank digital currency started getting popular,
CBDCs.
Interesting that it was first the smaller countries, the island states that were interested in it, and I actually met the governor of the central bank of Uruguay, who everyone in the world seemed to have forgotten that they actually had a pilot in 2017 or something like that. And then they quietly shut it down. They said, you know what, it's conceptually too dangerous to try and run this, to scale this. So they quietly shut it down. And then the Central Bank of China, PBOC, took on the idea. And when the PBOC tried to build CBDC, all the other major countries started looking at it seriously.
Taking notice.
Taking notice.
Yeah.
At first, it was a very simple idea, which is using Bitcoin technology,
blockchain, decentralized blockchain.
Using that technology, the central bank issues the currency and it issues it directly to everyone who's a user.
Yes.
And it's so beautiful that the central bank will be able to know exactly where this currency moves.
Yeah.
Okay, that was the simple idea.
Yeah. So let me just explain that. So essentially, it's blockchain based. Maybe a centralized blockchain, but when the consumers use and spend the money, the central bank blockchain it clears transactions, so they can see all the payments. Right. Today, think about the bank transfers. When I make a Zelle payment, when I make a PayPal payment, when I make an Alipay WeChat payment, the central banks don't see it. The companies do. Zelle, Alipay, PayPal, Square, they see it. But now with CBDC payments, the central bank sees it. The country sees it.
And it's directly from the central bank to the end user.
Correct.
And after they fell in love with the idea, then they said, okay, wait a minute. If it's between us and the end user, we don't need the banks. But we do need the banks, because the banks are the ones that leverage on the money that is in the accounts and issue loans. And the economy as we know it to be today can
it's
only
based
grow
with loans and lending.
It grows on the back of lending,
Yeah. So is this a fundamental problem?
It is a fundamental problem. And
tell me.
That is why there is no major country that wants to go live with full CBDC to this day.
Because once you have full CBDC, then you don't have lending, you don't have deposits.
Well, they are afraid of unintended consequences.
Yeah.
Okay.
But am I correct to say that there's no deposits anymore?
There's no need for deposits, right? Because then what would the banks do to incentivize customers to leave deposits with them? They have to give higher interest rates or something. And you'll have a dual system where you have both the CBDC and bank accounts and stuff like that.
Yeah.
So none of the major countries were brave enough. So every time you hear of a CBDC pilot, please ask this next question, which is, why is your pilot taking so long? Okay, please ask this question because the PBOC CBDC was 2018 was when they released it, and to this day they keep saying, oh, we are still testing it, we're still a pilot, and so on.
Well, what's your inside track on why it's taking so long for China?
Well, it's not just China; it's every country that's
Is it because the commercial banks are just way against it?
No, it's the central bankers are afraid of the consequence of going fully live.
I see.
Okay, that's one. The second thing is that the technology is moving so fast that crypto just keeps evolving beyond CBDCs.
Yes.
Right? So in the US, for example, there was the crisis of the Silicon Valley Bank.
Of course.
Right?
Earlier this year, we all remember.
And what is a Silicon Valley Bank crisis? It is bank deposits which are digital today, which on the back of a tweet from from Elon Musk
or a venture capital firm,
or
pulling money out of Silicon Valley.
Yeah, it was Peter Thiel actually who sent out a tweet
he sent an email to all his portfolio companies. A tweet, okay.
On a Tuesday morning, on a Wednesday morning, $10 billion just gets withdrawn.
Yes.
And then another tweet by someone else, I forget, on a Friday and on a weekend, another $10 billion.
And it's done for.
And it's done for. The balance sheet is gone. The whole gets shown up because they don't have enough deposits to hold up.
Yeah.
So if that can happen to traditional bank deposits that are digitized, what do you think will happen when money is totally digitized?
To CBDCs.
To CBDCs, right?
CBDCs, yeah.
So they are afraid of the unintended consequences of going live with full digital. And yet, when you look at Bitcoin, it's traded 24/7. There's no downtime. There's no back office that does the processing.
That's right.
And it's got its own liquidity. You can buy and sell at any time. And there's no balance sheet at the back of it, meaning that it doesn't make any single person go bankrupt unless you leveraged it.
Yeah, so that's the beauty of Bitcoin. Bitcoin is not asset backed.
It's not asset backed.
And therefore there's no balance sheet, there's no being undercapitalized or overcapitalized. It is what it is.
What the central banks have done, and today what the BIS has decided among the major countries is that a wholesale CBDC is better than a retail CBDC.
Oh, interesting.
Okay. And so what the decision that they're coming to collectively, and I follow all of them very closely, is
CBDC for businesses only.
For
wholesale businesses.
For approved institutions that keep the wholesale. And in some jurisdictions, they're already starting to talk about banks digitizing their deposit business. Okay? Now, they're giving it all sorts of names, but that's what I call that banks are now ready to issue their own stable coins.
Yes.
Okay? So, and I say that in my blog, by the way.
So again, just for the audience, so today stable coins are issued by companies, right? So like Tether, Circle issues USDC. Tether issues a very famous USDT. Most popular stable coins are issued by companies such as crypto exchanges or crypto companies.
Yes.
But you're saying something different. You're saying the new generation stable coins will be issued by commercial
Please
banks.
remember that I said this. Okay?
Yes,
I saw this. Yes. I'm the first guy who said that this is possible, and now I'm seeing BIS white papers, working papers saying that that's where they want to go. Okay, and what they're telling their respective banks in several countries is that can you digitize your deposit business and issue your own, and they don't call it stable coin, they call it something else. They call it anything but stable coins, and I'm looking at it and I'm saying this is stable coin. And why? And I actually think that that's a good thing, by the way, because when you think about Tether and Circle and so on, is that what is the biggest problem with stable coins right now? It is the governance structure behind it, right? It's the accountability, the trust, right? And the balance sheet that they can hold on, and whether you can trust that the balance sheet is what they say it is. And what type of institution do you think is most trusted to have a balance sheet that people can trust? It's banks, and if you digitize the deposit business, and that's something else that I say in my book about innovation in finance or innovation in general. And it was a huge struggle writing this book because, I asked myself this question: if finance is going to be innovated, what is the single most important transformation that will indicate that finance is forever changed. And I said in my book that if the product doesn't change, nothing changes. Right? And then I went on 2 years from the time I came up with these ideas to finally coming to the conclusion that the product that is most ripe for change today is the humble deposit account in a bank.
Okay, tell me more. In what sense is it right for change and ready for change?
Think about the deposit account.
Yeah, so this is a classic bank account, a checking account, a savings account.
You got it.
For a regular person.
Okay, so what is a classic banking account? In the old days, it used to be something that you took your salary check, you went into the bank, you dump it in there, and you never saw it until you really needed it.
Yes.
And every year you saved, and there's a compounded interest that 20 years later you're going to be very rich because don't underestimate the power of compounded interest.
Yeah.
And then the bank started to give lower and lower and lower interest to the point that it became ridiculous. Like the taxi that you take to the ATM to take your money out wipes out the interest for the month. Right?
Yeah.
That's how bad. And in Japan, in Switzerland, it went into negative interest territory where
they charge you.
They charge you for a deposit. So the deposit business had started to unravel, and then because it was becoming more digitized at the same time, a bank's deposit account was valued for how digital it was, how much access it gave to transactions. So if you had an ATM card, if I could do a transaction on a mobile phone, if I could do digital banking and transfer money around, those were the things that people started to value about a deposit account.
Yeah.
So what the banking industry didn't realize is that the deposit account was already becoming digital, and the value of a deposit account was no longer in wealth creation, it was more in utility.
The utility of the bank account, okay.
The utility of the bank account.
The convenience of payments and
then at the same time, you saw that the digital wallets became as powerful as the banks. So in China, for example, you had WeChat, Alipay, which had deposits which was larger than a lot of the banks. In fact, they became net lenders in the interbank market because their source of
there's so much deposits
and for free. They don't even pay the interest on it. So it's even more cheap. It's even cheaper than the biggest banks in China.
Yeah.
Right. And so the regulator gets afraid because, wait a minute, here you have something called a deposit-taking account. In fact, I remember a conversation I had in 2014 with a regulator in Beijing who asked me, "How do you regulate deposit-taking accounts?" And I said, "You've had WeChat and Alipay for the last 4 years, and you're asking me this question today, And we all think that regulators are smart people who anticipate and build structures, and they got it all under control. Actually, the technology is moving faster than them.
Yes.
So you need to understand that most of the time they are running after the technology and trying to put in place the rules to govern that. And it was not before 2017 when all the rules came into place for deposit-taking accounts. Okay, and that's only in China. But in the US, you have Zelle, you have you've got PayPal, Square, Cash, all of these. Venmo. And these all became deposit-taking. The only problem with Venmo is that because it's bank industry owned, so the banks are not afraid of that. But insofar as it is a standalone deposit-taking company, and there's a dichotomy between how things moved outside of the US and the rest of the US and the rest of the world in terms of payments. But even the US is going through this now, which is it's becoming increasingly digitized.
Yeah.
Right? And then after digital wallets, you have the next phase of the evolution, and look at what's happening. Tokenization. You need to be tokenized to have greater access to to the metaverse, to non-tangible assets, non-fungible assets, NFTs. And stuff like that. So the evolution is very clear. The central bankers are determined to stay ahead of the evolution. So the model that I see is that yes, central bank digital currencies have a role, but even there, the central bankers are afraid, really scared, because when you create a wholesale central bank digital currency, who's going to provide the liquidity when you need to have interbank transactions?
True.
And they're thinking about it wrongly too, because what they're trying to do is to recreate the banking system as they know it to be, the interbank payment, the custodian and the correspondent banking networks, they're all existing infrastructure, existing way of doing business, and they're trying to superimpose crypto on top of that.
Yeah.
Which to me is like, guys, I'm just sitting here and watching this fun. And this technology will move so fast that it will be ahead of you all the time. And all I'll see that is happening is you will be just issuing white paper after white paper, trying to just keep up with how it's evolving. But right now, the commercial banking industry has come to a point where it has understood enough to absorb the technology. The big thing I'm waiting for is how will crypto continue to evolve?
Okay.
Now many of the crypto tricks have been tamed. Liquidity to some point. There are some things that have been tamed.
You said crypto tricks being taken. What do you mean by tricks?
Yeah, I call them tricks because
explain that.
They were meant to be competitive advantage that exists in crypto but doesn't exist in traditional banking.
Okay.
But like disintermediation, for example, except for Bitcoin,
is it things like decentralization, things like permissionless? Yeah. But they have not been adopted in traditional banking.
They're not in. Well, traditional banks are moving towards permissionless. Okay, they have given in already. So it's in the BIS white papers that even a JP Morgan issuing its own coin Onyx is now permissionless. So they started by trying not to be permissionless.
It didn't work. Not competitive.
Not competitive. The technology just keeps moving, and also permissionless became easier to manage as well. It's possible to track the users. In other words, you're allowing all participants to participate, but you can put a halt and you can do an audit at any time in a transaction. So you can actually manage it backwards rather than managing it by deciding who participates and stuff like that.
Yeah. Right.
So the technology is a moving target at the moment. Now, like even Gary Gensler with SEC, chasing the hell out of the crypto world,
that's an understatement.
Yeah, but in a sort of obtuse way, he's actually keeping them honest. So
keeping the crypto world
honest, because if he didn't exist, crypto would be a security. It would be a security, and you have half a dozen players issuing cryptos as a form of a security.
Just to clarify, so most of crypto, he does say, is a security. Only Bitcoin and I think Ethereum have been ruled as commodity.
Yes, only Bitcoin, not even Ethereum.
Only let's just say Bitcoin. Yeah, only Bitcoin has been exempted from the security classification.
Yeah, and some of the functionalities like DAO, for example, it's up in the air. I mean, like what DAO can do, there are other forms of organizations, organizing or creating communities and so on, and file sharing. There are technologies that allow that, which exist outside of crypto.
Yeah, you talking about the decentralized, the peer-to-peer network connectivity.
Correct. So there are alternatives forming as well. So in other words, crypto is also on trial. It's not as if it's it's not a panacea or above criticism and stuff.
So I know we're near the end of our time in discussion. This is fascinating. I think you bring a wealth of experience. But I want to ask you, as an experienced banker and in the traditional finance, and having exposure to all the bankers and all the regions of the world that you work in, what's your view and your hope for Bitcoin? What do you see? You personally may invest in some Bitcoin. What's your sort of 10-year, 20-year, 30-year expectation of Bitcoin?
Okay, first principles of any technology or any innovation in technology, that actually technology commoditizes. Technology destroys value. It doesn't create value.
Interesting. That's the opposite.
It's just the opposite.
Okay, but go on.
Yeah. So it's if the more expensive Bitcoin becomes, the less utility it has. And this is my take.
Please continue.
Yeah.
I want to hear more about it.
So I do look to the day when the most useful case for Bitcoin is when its value is par, like it loses all this intrinsic asset value that we give it today. So
You said it's par as in par.
par to whatever the economic activity is. In other words, if it should only cost you $1 to pass the token to each other, then Bitcoin should only be worth $1 or 10 cents or whatever it is, however we classify value in
So
the
you're
future.
saying you see an end game where Bitcoin, are you saying it's worthless, or are you just saying it's people don't care about how much it's worth anymore?
Very good point. I should say people don't care how much it's worth anymore.
So it could be worth a lot, it's just that becomes a new standard for measuring value.
Okay, that's a better way to put
Right,
it.
I
People
think
don't
that's
care
what you
what
care
it's worth
Yeah.
anymore, which means that actually it then becomes worthless because that's the only time that it will have the highest utility. And in other words, it becomes an intermediary itself. It's the ultimate intermediary.
It becomes the unit of account.
Accounting, now, in my book, there's a whole section where I explore out of the box, nothing to do with finance. I explore how we transfer value to each other.
Yeah.
Right? And I start with the sun. How do we get energy transposed to us?
It's
Right?
from the sun.
From the sun.
Yeah. Light rays, heat.
But unfortunately, the light rays don't come to us directly. It goes to the plants,
Oh, I see what you're saying. Yeah.
which then uses chlorophyll to process the light, becomes energy. The animals eat the plants and we eat the animals.
Yes, yes.
Right? And it creates a whole different ecosystem. It would be
Correct.
different if we had photosynthesis on our body. We would just be a totally different civilization as a result.
Very
So,
true, yeah.
so then the thing is, money is a token of exchanging value.
Yes.
What if the value is exchanged in the asset being exchanged in the first place?
But that is money, isn't it? Money is an asset, don't you think?
No. If I wanted to sell you, a bowl of noodles,
And I give you money, it's
you-
asset for asset.
Yeah.
Doodles are assets too.
Yeah.
It just doesn't hold very well.
That's right. So that's where the problem is, which is that the asset itself, or rather the thing of value doesn't carry the asset itself doesn't carry the value in it. So how is the value transmitted? So
Yeah.
I asked this hypothetical question
Yeah.
to try and make sense of how will we be exchanging value with each other? Okay, because in the networked world, the value is actually in the network. In other words, you become more secure. Your life becomes more secure the more networked you are with other people, with all the things that you need to do. So your level of being networked is in itself
Valuable. Yeah, but I don't think that's the ultimate and the only form of value. Right? I do agree with you. The network is highly valuable. People who have a good network of social friends and professional friends, have derived more value from that social status than people who are loners and don't have.
So I ask questions like, will quantum computing finally break the Bitcoin algorithm? Right? And
Yeah, that's a great question.
And the answer that I'm getting is, the more networked Bitcoin is, the more secure it is, even from quantum computing.
Yeah.
Because it's not so much the algorithm, but the people networked around it that creates the safety and soundness.
Yeah.
So these are questions. I don't have an answer, but I don't take anything at face value.
Good, very good. Okay, excellent. So that's a great introduction. Thank you for sharing all your thoughts, explanations about the BIS and all that. Oh, just maybe one last question. So what's the situation with SDR, special drawing rights? So this is an IMF thing, right?
Yeah.
Is that right? Are you in
Yeah.
that realm? Do you know much about it?
I mean, you're talking about the internationalization of the renminbi.
Not in terms of the renminbi, but special drawing rights, the SDR themselves.
Yes, it's a basket of currency.
It's a basket of currency. Yeah. It has RMB in there.
Yes.
Yeah. What do you think? What do you think the future holds for that, in comparison to Bitcoin? As a global asset class.
Well,
So my view is Bitcoin is going to become the global asset class.
it is.
It's not yet. It's not there yet.
Yeah, by the way, one more factor to add into what your line of thought on this one is that the digitization of the US dollar, right? Now, the US dollar is the currency in circulation worldwide.
Yes.
The SDR is special drawing rights for borrowing. It's not special drawing rights for payments and
Fair
trade.
enough. Fair enough.
You know, so
But it is sort of the central currency. It's sort of the global central currency for all central banks and nations, isn't it?
yeah, but it's managed by the IMF and it's a central bank to central bank kind of arrangement.
Yeah.
And the only central banks that want to see their currency represented there are the ones that want to benefit from trade, and
That's true.
and investment,
Yeah.
right? So the thing is this, that when central banks want their currencies to be accepted globally, technically what they're also saying is something very weird, which is that we want our currency to be attractive to all of you, and the only way it's going to be attractive to you is that if it increases in value or gives a high interest rate,
Yeah.
which means that we have to work for the rest of the world.
Yeah.
Now, in a way, the US works for the rest of the world, but it's the developments it makes in technology makes up for this need for return on investment, right? Now, any country that takes on this idea of being a global currency has to think about that, which is, what about your economy will be interesting to the rest of the world?
Yeah.
Okay.
So in our lifetime, let me end with this. In our lifetime, do you think we will see the end of the US dollar as a global reserve currency? Do you think it will switch away from the US dollar?
Yeah, so the US is scrambling to play one more card left, which is digitizing the dollar.
To prevent
The dollar from losing that status.
But in your opinion, your personal opinion, do you think it will change in our lifetime, in your lifetime?
It has the potential for changing, but there are no clear winners on the other side of the equation, which is it is not a given, and therefore that renminbi will be the winner, or something like that. Now, the thing is that it took about 40 years, from before World War II to about the 1970s for the sterling pound to lose that status.
That's right.
And it was a long and slow death. The end of the Suez Canal, the end of the colonies going independent and all that stuff, right? And in that time, by the way, the US was actually already the wealthiest country in the world, except that it wasn't a global trading country yet.
Got it.
So it's a long story. It's not a short story with an answer next week.
Fair enough.
So the thing is this: the US has still got one more trick to play, which is to digitize the dollar.
Okay.
And the best way the US can do this is to accreditate or to legislate that approved institutions can issue their own stable coins.
There we go.
In US dollars, and as long as they are regulated.
Yes.
And immediately it becomes global.
Okay,
right?
good.
Now, every single day, Bitcoin sits there offering itself as a global currency.
Yeah.
Right? And every nation in the world is doing everything possible for that not to happen. Right? And for that to happen, and that's another thing that I say in my book, which is that innovation and breakthroughs in finance always happens in times of crisis.
Yes.
It doesn't happen at times
Peacetime.
of intent.
Yes.
Okay. Why did the US break away from the gold standard? Because it couldn't meet its obligations anymore. And it said, guys, we will not peg the dollar to the price of gold anymore.
Yeah.
And that was in 1971. And it never went back there. It said it's a 3-month short break, trial, and it's now years later. So, and like that, every time you look back at a real point of inflection in banking or finance, it's always because of a crisis. So it'll be a crisis that will drive the world to, out of desperation, cling on to an innovation that's sitting there waiting to be used.
Very good. So we'll end on that. That's excellent. I'm very happy ED came on and joined our podcast. This is a very heavy session. It's a lot of terminology, very advanced topics, and I urge the audience to really, even watch it again to think about what ED said on all these topics. Very, very advanced. Thank you very much for being on the show.
Thank you, Bobby. It's fun and always fun to catch up with you.
Yes, and we should do it again.
Absolutely.
We should do it again.
Anytime.
Okay. Congratulations on the publication of your
Absolutely.
book. The book is called The Great Transition: Personalization of Finance is Here. Okay, and you can get this on Amazon.
Amazon and everywhere else. Yeah.
Yeah, and I think you told me that it's also going to get published in China.
Oh yeah, there's a Chinese version coming up, and I'm thrilled about it. I'm actually very interested that the idea of personalization of finance has been approved for publication. So and then of course Spanish and French and all that later.
Good. Okay, congratulations. Yeah. Okay, thank you everyone for joining me on another episode of the Bobby Lee Bitcoin podcast, and see you all again soon.